Hello everyone, this is Andrew and today is March 17, 2012 and I want to start this video off with the Elliott wave sequence and the Fibonacci relations. Basically, wave 1 is an impulsive wave which Elliott traders don't use for trading but rather for analysts of wave 2. And so, you don't want to touch the wave 1. Wave 2 normally retraces about 50 to 61.8%. Wave 3 normally tends to be 161.8% of wave 1, and it can go beyond 161.8%. But once it goes above 161.8%, that just confirms that it's a wave 3. Wave 4 is the shortest wave, and normally it reaches 38.2%. However, there has been instances where it can go a little bit shorter than that, like around 23-24%, which has happened. And wave 5, if it's greater than 161.8% of wave 1, the length of the target for wave 5 will be 100% of wave 1. And I bring this up because I see the same thing happening with the overbought Nasdaq, S&P500, and the Dow situation. And if looking at this chart, the numbers fit just right. It fits just right. And so let's go over the S&P 500. I think this is a wave 1, a 2, a 3, a 4, and a 5. So if you go to a 4-hour chart for better viewing, if we take the low of this, and the high of that, we can see that this touched this level right here. This is the 50% area, and according to this right here, it can go all the way as low as 61.8%, which we got. So this is 61.8%. I know it says 61.8% here, but just think inverse. And still, it hit this line right here. It hit it. It's perfect. It's perfect. And so let's get rid of this trend line. That doesn't need to be here. Wave 2. So that's the wave 2 that we saw. A 1, a 2. Now, if we look at wave 3, it's never the shortest wave, and it tends to be about 161.8% of wave 1. But it can go beyond 161.8%. It can happen, and it has happened. So because of that, we can confirm that this rally right here was a wave 3. It's a wave 3 because it went above 161.8%. So what I'm projecting that's happening now, let's draw the low and the high, is that we just recently saw wave 4. Wave 4 is one of the shallowest waves, and it often retraces as close to 38.2% of wave 3, and it rarely retraces 50% of wave 3, so that's out of the picture. However, it doesn't have to retrace 38.2%. That's the average normally. In fact, it can retrace lower. And so just by looking at this, if you take the high and the low of wave 3, wave 4 hit this Fibonacci relation line right here. It stopped at this gray line. And so, if we looked at this inversely, this is, what is it? I can't even see the damn number. 23.6%. And so, if we look at this line right here, wave 4 went down 23.6%, and now I see a rally going forward. And of course, if we look at this Fibonacci relations, if wave 3 is greater than 161.8% of wave 1 in length, the target for wave 5 will be 100% of wave 1. And so that's exactly what I'm seeing right now. So if this is wave 1 and we're starting at wave 5, you can do the math yourself, but since I already done it, I'm going to tell you what the numbers are. This thing should go around 1,450. 1,450 is my target right here, and then that should complete the whole Elliott wave sequence, and then we should see a correction. So this damn thing's going to crash. And with the whole European situation, it's too quiet. With the whole Greece situation, with all the money flowing out of Italy, Spain and Greece, the news media is not reporting this. And so it's too quiet. I think what's going to end up happening is that, the bankers are waiting to short. They're waiting until this level is reached around, 1,450. And then your friends on Wall Street is going to make you rich. This thing is going to plunge at least to this line right here. It should find some support, some resistance. If not, the next level is right here. But, I'm going to take profits once it hits right here. And another good indication that I want to use is this right here. The Nasdaq is doing the same thing as the S&P500. Yeah. So if we look at the Nasdaq, it's basically almost the same chart. The only difference is that we have an extended third right here. And so, it should be the same as wave 1, which should hit, approximately 2,780 before we see reversal. And if we look at this right here, the IRS is the best indicator to note for stuff that is overbought. So the Nasdaq is reaching overbought conditions, so be very careful. Be very careful going in. If you look at the S&P 500, if we look at the daily chart, it's looking overbought. 1 hour chart, well, we better start with the 4-hour chart. It's looking pretty high. The week chart, the MACD stating that it's overbought, and the month chart, close to being overbought. So I think this thing's gonna crash. This thing's gonna crash. Next thing that I want to talk to you about is gold and silver. Now for gold, I think this is what's happening right now with the gold chart. This is what's happening. I think that it's following a trend right here. I think this thing's gonna go all the way up to 1670, and then we're gonna see more crash. We're gonna see more crash. And that's probably what's holding silver back from crashing. Right now for silver, I see a head, shoulders formation. I found resistance right here. And so one or two things are going to happen. It's going to find some way to go back into this trend line, which it already breached. And so I'm thinking what's going to end up happening in the long run, of things is that it's probably going to go right here around, 33.40, maybe could even go up to 34.25. And then after it hits those levels, we're going to see more crash, baby. More crash. And I think the next projected level is probably going to be 30, around 30 to 28 levels, where it's going to find some more support. So this is the left shoulder. This is the head. And then the right shoulder's looking like it's going to pop. And then once it hits 26, dollars for silver, that's a buying opportunity. And hey, it could even head lower. It can head probably to 22. I don't know. I think this will be interesting. This is very interesting. And another thing that I want to note for the stock market currently is that if you look at this Mark Farber guy, type in Mark Farber. This Mark Farber guy. Look at his blog. He even said on his blog that, where is it? The markets are overbought on March 12, 2012. Markets are overbought technically and have deteriorated. We have very heavy insider selling, so I think a correction is coming. I don't think investors should be shooting for huge gains, but rather for preservation of capital. And just recently, he made another comment on March 16 today, and he says that I don't think the stocks will go up a lot. I personally think they will correct. And so this Mark Farber guy, normally this guy's correct. You see, the thing about Mark Farber is that nobody listens to him, along with Gerald Celente. In fact, they call Gerald Celente a pessimistic porn dealer because he keeps talking negative about what's going to happen. And these two economists are heavily degraded, and the media ignores them because they're normally right, and because most of Wall Street don't want to listen to them. This just confirms, in my opinion, that a stock market correction is coming. It's coming. And so this is what I have my eye on. SQQQ. And this is what's going to make you rich. This is what's going to make you rich. So, as I said, this is the inverse of the Nasdaq. So if we look at the Nasdaq, if we look at the Nasdaq, we can see that this is an uptrend. SQQQ is the inverse of what the Nasdaq is doing. And so I'm waiting until this damn thing, once the Nasdaq hits the levels that I want it to reach, and then the game's gonna get interesting. I think this stock is gonna have a little bit more down. Maybe, I don't know, could be up to like, this thing could go all the way to $10, maybe $9.50. But whenever it hits that level, whenever I see the 100%, of wave 1 to wave 5 ratio, then I'm going all in, baby. Right now I'm strictly in cash. I'm in cash. And so I think this damn thing is going to reach all the way to 17.50 at least. And so that's a 70% gain right there. And this is what's going to make you rich. I'm not shorting gold or silver, because those gold markets and the silver markets, they're too damn schizophrenic. You don't know what the hell that thing's gonna do. Because whenever you try to short it, that's a mistake. Because I think in the long term, gold is gonna hit 2,000 an ounce, and so if you short it and you're wrong, you may not recover until a very long time, until it goes back to that levels. So then, if you have money locked in, you're stuck. You're stuck. You're stuck. You're going to be out in markets for a long time. And so I think this is the best opportunity right here. It's the best opportunity. Just wait. And then, invest right here. And just wait until this damn thing hits back up to 17, 15 at least. And that's when you want to take profits. That's your update today for your markets. If you have any questions, concerns, hit me up on Facebook, or send me a text message on my phone, or send me an email. Thank you for watching, and stay tuned for next week. Goodbye.